In the next 10 minutes, I hope to unpack what's going on in the Sun Valley market for you. We've got price points that are staying relatively flat, but we are seeing a big increase in activity. Pendings are way up, closings are way up, and inventory is on its way down. What does this all mean for you? Go ahead and give this video a watch. And if you've got any questions about how this market impacts you personally, I would love to connect. Go ahead and give this video a like and subscribe. I'll talk to you guys soon. What is happening in the market in Sun Valley? Let's have a look at what transpired through October. There's some really interesting stats to go over, and some of these numbers are really interesting. You would think, based off what we cover here today, we would be looking at higher price points. We would think, based on pending sales, closed sales, and inventory, that we would be seeing a rise in prices, but we're not. What's going on? Let's dive into these stats. So here's our median sales price month over month. You can tell that we are down from 2024 and 2023's numbers for the most part. We're actually sitting at just below $1 million on the median price point for 2025. Now, that's the surface level piece to this thing. Let's look at the pending sales. So here we go. We've got quite a bit of activity in the market. So if I just go back to July through October and compare that window, 2025 versus 2024, we've got 250 active or 250 pending sales in 2025. We only had 189 in 2024. So what's going on? There's serious activity in the market. There's just no denying the fact that there are more buyers this summer, starting into Q4, making offers and getting contracts accepted. So we got a 32% increase in activity. That's part one to this thing, where I would start to think that we would see a rise in price points, but we're not there. So did these things get to the closing table? Maybe there's a gap. Maybe the 250 pendings, maybe there was a fallout and a lot of these didn't close. Well, here's our home sales month over month on closings. Again, we look at July through October, and we have closed 219 versus 180 last year. So we've got about a 20% increase in closed sales. So if we're just looking from a supply and demand side of things, we've got clear demand in the market. Well, maybe the inventory is way through the roof, and that's what's keeping things down. Well, let's have a look at that. Active units. Now, we know historically we are below where we need to be. We looked at these numbers, I think, a month or so ago, and back in 2017, 2016, at any given time, we would have 600, 700, 800 active residential properties for sale in the Wood River Valley. But we have not gotten above 500. Now, I'm very hopeful that this July we did see that number get to 440. That's great. I think we need to see inventory continue to climb. But look at where we are in October. We're down to 338. So we've got 100 less active residential properties on the market. So again, we've got pendings up pretty significantly. We've got closings up pretty significantly, and we've got inventory down by about the same margin. So about 20% decrease in active units for sale. So why haven't we seen the price point increase? Let's have a look at inventory. Now, this one is very interesting because this tells us what kind of market we're dealing with. And there's three types of real estate markets. Remember, we've got buyers markets, we've got sellers markets, and we have got balanced markets. We're sitting at about 6 to 7 months supply of inventory. What that means is at the rate things are selling, if no new inventory came on, how long would it take for us to trade every single residential unit that's on the market? And that says about 7 months. So that's what we're dealing with here. Anything below the 4-month marker, you're dealing with a seller's market. Anything higher than, call it maybe about 8 months, you're dealing with a buyer's market. A balanced market sort of sits in that sweet spot of 6, 7, 8 months worth of inventory. And we're right there. So that might be one indicator on why we are not seeing increases in prices is because our inventory is balanced. That might be one reason that we're seeing that prices are not moving up, is that we do have that balanced market. So some of these numbers are a little bit hard to reconcile. Again, we've got increase in activity, we've got a decrease in units supply, and yet price points are relatively stable. Now, it is a lag indicator, right? So when we write contracts, it takes, give it 30 to 60 days depending. And we are seeing more properties that are contingent upon I have to sell my home to buy that home. We're even seeing multiple deals where it's one, two, three, four properties need to trade in a row for a deal to get to the closing table. So that could be extending our closing timelines. What would typically take about 30 days to close, maybe 40 days to close. We're looking at some of these deals maybe taking upwards of 60 or more days because of the contingencies that are attached to each offer. So pricing is a lag indicator. It might just be that we haven't seen a price increase because these closings have come through and the market hasn't shown up and told us that we're going to see a bump in prices. So what does this all mean here? If you're looking to buy a house in this market right now, you sort of have a unique window where you have options are still available, right? If I go back here to our active units, we've got more inventory than we did 2 years ago. It is tighter, but prices aren't increasing. So you've got a little bit more to choose from. You've got an increase in activity. And we might be looking at a potential shift towards uh, leaning into a seller's market here in the next, call it maybe 1 to 4 months, depending on what inventory does. And price points haven't spiked yet. So if you're waiting for a price drop, I'm not so sure that these numbers reflect the potential for a price drop. Now, there's obviously things that are extenuating beyond these, but I just look at pending sales, closings, and the inventory, and that doesn't show me that we would be looking at something where we would see a pretty big price correction in our market. What does this mean if you want to sell a home? Well, there are clearly more buyers in the market. There's just no denying that. If you are, we got more closings in the market, and we have a little bit less competition. So that's really good. And it is a technically balanced market. So if you're selling your home, depending on the location, you probably are going to be working with the buyer to come to agreed terms. So if you're waiting for the spring market, might be what you need to wait for, right? Timing's everything, and everyone's personal situations are their own. But it might be a great time to get your house on the market again. Inventory low, demand high. If you're considering selling right now, between the end of November going into early 2026 could be a great time to get your house on the market. So big picture here. We've got more buyers, we've got more closings, less inventory, we have a balanced market, and we've got stable prices for right now. So what happens in the next few months? We'll see what happens. Does inventory rise? Does demand wane? All these factors will come into play when we're looking at what happens with our price points. So a couple more slides just to touch on here. We have our volume. Clearly it's up, and that just is reflective of the increase in activity and our days on market, right? Give or take, we're dealing with about 70 days on market for the most part this year. I would say safe bet, it's about 100 days on the average to get a home sold in the Wood River Valley right now. And let's just touch on mortgage rates, right? If you look at this slide, it does show that we were predicting to be at about 6.5% interest rates on a 30-year mortgage. I believe as of this morning, we're sitting around 6.2. So interest rates are a little bit lower. That's giving the buyers a little bit of relief. I think we're all sort of waiting for these interest rates to get below 6%, and the Fed will make some decisions around that here in the near future. We will see where those go. Um, Go ahead and give this a like if you guys find any value in this. I really appreciate you giving the videos a watch. I hope we're bringing value to you. And again, I would love to be your real estate guide here in the Sun Valley area. Thank you so much.